everyone's been running to dollar denominated assets, which is the NASDAQ, S&P, not so much bonds, but they've been crowding into those areas. And I think some of that reason, if you want to know the reasons, I think there's two main reasons. I think the bond market has been pretty poor, so money's looking for a new location to park.
Yeah.
Another one's been a strong dollar. So those two things paired together are having money flows go towards US based dollar financial assets. S&P 500, NASDAQ, and crypto have been the ones that have been receiving this money. The valuations, when you price these things against each other, like emerging markets versus dollar denominated assets, I mean, this is like a historic high for the valuations of those areas. So I think it's crowded because it is literally telling us through the ratios. It's like, hey, look, this is very expensive compared to history.
Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from social medias. I'm joined today by Andy Hoese from Finding Value Finance. Great to see you, Andy. Welcome back.
Yeah, thanks for having me on. Really appreciate it.
Yeah, it's maybe I get it. Maybe I pronounced it right. Is it Hoese or House, or how do you pronounce your last name?
The first pronunciation, Hoese,
Hoese.
is the
Okay,
one.
sorry
Yep.
for that. Andy, we have entered in 2025, and by looking back to 2024, how successful were you? Did you pick the right commodities? Are you satisfied with your portfolio performance? Tell me more, please.
Yeah, I can tell you my performance. Well, first I'll describe kind of, I guess, my portfolio allocation. I have a large allocation to physical metals. It's about 20 to 25% of my entire net worth, and it's divvied up amongst gold, silver, and platinum. Those are the holdings that I have, and my physical holdings have done very well. Gold's done well, silver's done really well, and platinum, I think it was slightly down last year. So on that front, yeah, I did really well. I don't really add that to my performance. I mean, yeah, it went up in dollar terms, but it's more of my savings. It's more of a way to play the market that's outside of the system. My portfolio, I haven't actually added up all of my accounts' values, but I was pretty flat on the year this past 2024. So obviously, I underperformed the NASDAQ and a lot of those cryptos and all that stuff. Definitely underperformed them. Um, had a pretty strong selling pressure December. It was pretty rough with a lot of my holdings. I do have some uranium holdings. A lot of those, it was a pretty rough year for uranium in some of those holdings. Oil and gas, it was split. Some of them were up, some of them were down, depending on what you were looking at. So I was pretty much, if I were to guess on my portfolio side of equities, pretty flattish. I don't know if I was slightly up, slightly down, but it was pretty much flat. And that was, I'm not going to do anything different. I'm not going to try to time a short term, I'll say an arbitrary start and end date. Um, I went heavy in 2020. I'm going to continue to stay long in my commodities and the companies that I'm in that I like, which I like my portfolio. So there's no reason for me to change. There's no reason to do anything in my portfolio. So I'd say 2024 looking backwards, am I happy? Am I mad? Well, I think I was kind of somewhat expected. We were consolidating from 2022. I didn't know what 2024 was necessarily going to have in store for us. And I I'll say this, the three from 2020 to 2023, I had insanely good returns. 2024, it's been consolidating. Hopefully 2025, 2026 can be another push forward higher. So that's what
Yeah.
that's what I've done looking backwards.
Yeah, kudos to you for honest answer. I really respect that. And actually, 2024 was really a rough year for a lot of commodities. And when you say that you are flat with some of them, that is actually a very good sign, not a bad sign. Andy, I am speaking with a lot of people every day, just like you, and I would say 80 or even 90% of them have their fears of the market crash. Do you believe that fear is priced in the commodity stocks?
Well, I would say it's a difficult one. So I can tell you kind of what I see in the markets.
Sure.
I don't know if it's priced in or not. I would say probably it is already, but that's a tall order. So what I do is I take the three pillars: ratios, technical analysis, and then I look at market cycles. And right now we've got the yield curve that's uninverting, the 2 and the 10-year yield curve. So it's the short end of the curve that's coming underneath the 10-year. That's what's causing the concern for a lot of people on a potential slowdown in the market. What makes this incredibly difficult is you have two forces hitting each other. You've got an economic slowdown and you've got money printing, fiscal spending kind of teeing each other off. So I don't know which one's going to win. I don't know if we can get a economic slowdown while having inflation. That's pretty rare. Stagflation is what they call. When I look at the ratios and I look at what is cheap and what is expensive, the stock market and financial assets are expensive,
Yeah.
and commodities are incredibly cheap. So that hasn't changed. Nothing's changed since 2020 from a valuation perspective. I think oil, specifically oil, looks really good. I think uranium's probably going to do very well at some point. In the short term, trying to time a market slowdown is incredibly difficult with these two kind of forces hitting each other. And will just say, I don't know what's going to happen here in the short term in terms of pricing. If the inflation is persistent, which it seems like it is, it looks like it's ready to pick back up. I would say that if you're trying to time this, it's going to be incredibly difficult. So what I would do is I would adapt a time frame that goes on both before this and after this of whatever happens. I'm going to ride through it. That's kind of what I'm doing. Uh, am I going to be underperforming for a period of time? Could be very well. Just like 2024, I underperformed the S&P 500 and I underperformed the Nasdaq. But I still don't think I would have done anything different given the information that I have. So, given the information that I have, given the charts and the setups, I would be going long in some of these commodities. And if I have to ride through a slowdown, it's so be it.
Yeah, very good point. And we will cover some commodities. But before we do that, you really made a great point here. I found very interesting tweet from Basie letter, and I saw you reposted as well, where they say heading in 2025, there are now 100 times more assets in leveraged long funds than leveraged short funds. That's unbelievable. Over the last 8 weeks, this ratio has doubled actually, exceeding the record high set in December of 2021. So, and the question is the bull trade too crowded?
I would say yes, definitely. Definitely, it's too crowded. I think everyone's been running to dollar denominated assets, which is the Nasdaq, S&P, not so much bonds, but they've been crowding into those areas. And I think some of that reason, if you want to know the reasons, I think there's two main reasons. I think the bond market has been pretty poor. So money's looking for a new location to park.
Yeah.
Another one's been a strong dollar. So those two things paired together are having money flows go towards US based dollar financial assets. S&P 500, Nasdaq, and crypto have been the ones that have been receiving this money. The valuations, when you price these things against each other, like emerging markets versus dollar denominated assets, I mean, this is like a historic high for the valuations of those areas. So I think it's crowded because it is literally telling us through the ratios, it's like, hey, look, this is very expensive compared to history. So all the money's piled over there. We know that based off of looking at these particular ratios. The ratios like S&P 500 versus oil, S&P 500 versus emerging markets, versus platinum, versus gold, versus whatever you want to price against it. So is the trade crowded? Yes. Is it going to turn over and roll over? It's those two competing forces. It's the economy versus all this fiscal inflation and spending. And I have a feeling that there's some monkeying around with maybe some of the data to get positive GDP, reduce, they'll understate inflation, and they're probably monkeying around with some of the data. Keep in mind, they also changed the definition of what a recession is. And we had two negative quarters, and they're like, no, 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 we're going to change the definition. So what makes this incredibly difficult for anybody is the slowdown behind us? Is it still in front of us? Are we going through it? That's what makes it really difficult.
Yeah, let's cover commodities. I would like to start with uranium. Tax loss selling is over now. Fundamentals are getting better every day. Today we have another positive news with Chemico and Kazatomprom. Some stocks are heavily beaten. By that I mean especially the exploration companies. Do you believe it is a good time to enter in uranium for new investors, and for the existing investors a good time to add more? What do you think?
Yeah. So when I look at sectors and I break them down, there are there's hurdle requirements that some of these sectors and companies have to meet. The hurdle requirement, think of it as like physical gold, physical silver, and the
Yeah.
returns that you can get there. And then I look at risk, and then the risk will also factor into my decision on what to buy, when to buy it. Risk is does the company make cash flow? Does the company have infrastructure in place, and are they ready to go? Uranium doesn't really have a lot of that in place. We've seen from Paladin that it's difficult to even restart and get things going again. So yes, I think it's incredibly good opportunity to buy now. Um, but I wouldn't allocate maybe as much money to uranium as certain other sectors based off of the requirements that I put in there for cash flow and infrastructure and stuff like that. So I wouldn't go full bore into it, but yes, I would add the junior companies that you were just talking about are way low. So if you're going to be a contrarian, and this is very difficult to do for most people, they want to chase price. They want price as a validating factor for them being right. So they use price to determine the narrative. If you want to make a lot of money, and I'm not stating that the junior uranium sector is it is risky, but if you're going to put on a position, you got to do it when no one's looking. You got to do it when people are negative and the sentiment is bad. So if you want to make a lot of money, the sentiment is bad. Things look pretty negative at the current moment, and taking a position that is basically contrary to everyone else, I think is a really good idea. So we're seeing positive signals in uranium today. We're taping this January 2nd, where things are starting to come on up. That's generally where I try to get some shares.
Yeah, actually, that is what I learned in my 20 years of investment. If the only way to make money is if you're a contrarian, actually. There is basically no other way. Okay, there are maybe a few ways. It's a portion of luck, but yes, you have to be a contrarian, agreed. Andy, let's touch please a bit on gold and precious metals, silver as well. Let's start with gold. Gold hit all-time high this year. It's now it's around 2600, something like that, plus minus. How do you see gold going forward?
Yeah, I am still a massive bull on gold and silver and platinum. Palladium, not so much, but those three, huge bull. I am surprised at the performance of gold uh, this past year being as big as it has been. It was like plus or minus a little bit over 30%, somewhere around there. 28, 30%, something like that. The strong dollar and money flows kind of working its way to dollar financial assets. I'm just surprised that gold did as well as it did. I think the outperformance will continue over the next 5, 10 years. Will it perform incredibly well in 2025? It's difficult to say. Usually, when you get these big kind of upward swings, you get these big impulse moves higher. Sometimes it takes some time to consolidate and digest those moves, but it could still increase. So I'm remaining incredibly bullish on gold, silver, platinum, the precious metals group. I think they will get extra tailwinds when the dollar rolls over. So if the dollar goes up, which it's doing, if it rolls over, and remember, these are priced in dollars, I think it will change money flows potentially away from dollar denominated assets. So money will flow out of those dollar denominated assets into emerging markets, precious metals, and other commodities. So it's a very similar situation to what we were in 2000, 2001, that slowdown, where the dollar went up, things kind of went up. And in 02, 03, things started to roll over for the dollar and turn lower. I think we're in a very similar situation to that situation. So silver, uh, going into silver looks really good. We've got a cup and handle that's broken to the upside of a 45-year chart pattern. So with gold kind of being our leader, working its way on up, silver's been a little bit behind gold, and I think silver, I don't know exactly when, at some point, is really going to take off. And it could be now, it could be a year from now. And what gives me I'll say, what doesn't give me the 100% confidence is those competing forces in the market. It's the yield curve kind of uninverting, which is generally good for gold and silver. And then you've got the fiscal spending. It's just the timing that comes into play here. So we've broken to the upside, which is generally good. We could move sideways a little bit longer before really ripping, but I would remain incredibly bullish on silver. And platinum's just starting, it's squeezing up into a corner, ready to break out. Probably the next, however long this takes, it's gonna take. But I'd say probably within a year or two, it's gonna go.
Yeah, gold, silver, uranium, we covered those three, but which commodity would you say is actually the most undervalued right now? It's not those three. Which one?
Yeah, I would say natural gas and oil are probably the most undervalued. Platinum is also pretty undervalued, but I think oil looks really good here. Oil looks fantastic. Natural gas bottomed in 2024, kind of first half of 2024, middle of the year 2024. That's already got some momentum going to the upside. We're coming, it was coming from ludicrously low valuation levels. It had a fantastic year in 2024. Natural gas did. It was one of the things that held up my portfolio, were some of those holdings that were up. Some of them were up over 100% from its bottom that year. So this year, I think oil is going to do incredibly well. I know that's counter to what everyone else is saying. They're very worried about a potential slowdown in the market, and that very well could occur. And I may have to ride through some pretty big volatility if that does occur. But what I see in oil, I see a lot of things coming into falling wedges of oil priced in the S&P 500, oil priced in gold, oil priced in silver and platinum and all these things. It looks like it's ready to break out and outperform against those other asset classes. So I think oil looks fantastic. The fundamentals of oil look fantastic. We've got low inventories across the board. For commercial inventories, we've depleted some of our strategic petroleum reserves around the world. We've got low dupes, drilled uncompleted wells that are really low. So we've kind of worked through that inventory. I don't think we're going to be drilling like heck at 70 something dollar oil. Um, Shale could be rolling over. I know Goring and Rosenzweig, they came out with an article saying that we could potentially roll over. Do I believe it or not? I don't know. I don't have any reason to doubt it. So what I'd like to see is prices go up, and then I want to see if production responds and what it and how much does it respond. If it doesn't respond and production is topping out or flatlining or potentially even rolling over, I think that oil could be, given where we're at this past December, could be the second best entry point that there is, could be ever, because the ratio of oil to gold was at around 40 in December, and now we've broken that we'll call it, there's an uptrend where gold was outperforming oil. It's starting to turn and it's broken downward. So I would say oil could be its second best opportunity since the 1800s. The first best opportunity was 2020.
That's great to
So
hear.
oil.
Very interesting. Do you have some oil companies on your radar? What kind of profile of oil companies actually you are doing some due diligence on?
Yeah, I'll talk about generalities of it. I don't want to give the specific names,
Sure.
but what I'm doing is going around the world and I'm looking at where we can increase production. And that's kind of the first thing I look at. Where can we increase? And it's that right there will signal, it'll basically, it'll narrow you down to maybe a handful of countries. Then I ask, well, what is the most sought after products in the world? You've got kind of lighter oils, heavier oils, natural gas. Natural gas, I think there's still a chunk of that left out in the world for sure. The heavy oils are much more scarce. So I lean more towards the heavy oil side. And then I look at, well, okay, well, if they can grow production and it's of the right heavy oil, let's say, are they in a country where they can export it? So I want to be at a spot where you've got increased production, exportable oil. And that will be the most valuable oil in the world because you can export it. Now, the Middle East, their internal demand continues to climb. Their exportable capacity continues to shrink. And if they roll over in their production, which is possible, the exportable capacity around the world is going to shrink, 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 shrink. So uh, if I can buy oil where it's located, where the ratio is 40 to 1, so 40 barrels of oil to 1 ounce of gold, historically the average is 15. A expensive is below 10. I can get it when it's cheap. I can get the right companies in the right locations selling the right products with exportable capacity. And then I can take this bet when it's cheap. And if there's the upside of a rollover in shale, I think that this could be one of the best opportunities of any investment if world production does kind of flatline or roll over. Demand looks strong. We continue to see demand climbing. So I kind of look at all this and I just say, well, that's what I'm going to go after for my investments.
Good answer. Is there any commodities? Are there any commodities that are on your radar as commodities that you never invested money? This will be the first year that you ever invest in some commodity that is maybe on your radar. Do you have any of those?
Yes, I do. I think lithium looks really good down here. Lithium has broken some downtrends. I think it's incredibly cheap. It's just starting. We've squeezed up into falling wedges and just started to break out. So this past couple of months, I took some positions in lithium, and I do think they are still good and still down at this time. So I think lithium is one to look at. I think coal looks really good. I missed the coal train in 2020. I actually charted some of the companies on the YouTube channel They looked fantastic. I said they looked fantastic, and I just didn't buy it. I thought that natural gas was going to be basically replacing coal. I was wrong on that. Coal looks incredibly fantastic. If we do get a rollover in oil, I think that the response of nuclear is going to be slow. It's not going to be as quick as what most people think. I'm using Paladin as my case study for its inability to quickly ramp up uranium, not to mention a lot of these companies that are going to be going from scratch, which I think is going to be very difficult with permits and all this other stuff. So I think natural gas and I think coal is going to do incredibly well with the increased demand in electricity for AI, for going to electric vehicles, for whatever we're trying to do. We're trying to go with more electricity. Longer term play, totally, I'm totally on board with nuclear. I just don't know if they can ramp it fast enough. So I think coal and nat gas will do insanely well over this next 5, 10 years.
Yeah, you are probably right. And the final question, do you believe it is a good time to increase cash position? I mean, considering all the topics we touched here, possible market correction, etc.
Mhm. Well, I think it depends on what you're invested in. So if you're really heavy into the overvalued stuff like the S&P 500, the Nasdaq, I could see selling some of those and putting it into cash uh, because of the valuations. If I were in oil, nat gas, coal, uranium, and a lot of these other commodities, precious metals, I wouldn't sell any of that stuff to raise cash, and that's obviously myself. I don't see the reason to do that. So if I were transitioning from one sector to another, I could see, a portion where I could keep that in cash. I wouldn't get scared out of my positions specifically for oil. And I know oil is really sensitive to these recessions. I mean, it really could fall. But given where we're located, on how cheap we are, I wouldn't sell and raise cash from those holdings. And that's where I keep a lot of my holdings. And yeah, I don't think I would do it even in copper or uranium or anything like that. I think it's too low. I'd actually be a buyer.
Yeah. That was Andy from Finding Value Finance. Andy, thank you very much for this chat. I really enjoyed it and I look forward to host you again soon. It has been all 1 year since you were in on my channel, so let's bring you back in few months, not in 1 year, please.
Sure. Yeah, no problem. Thanks for having me on. I really appreciate it.